Hello, everyone. Hope you're doing well. With the price of gold hitting $3,000 US or passing it, silver at, I believe, a 12-year high, and Aussie dollar gold cracking $5,000, probably an appropriate time for a quick charting update on the precious metals. Let's just move that title out of the way and come over to our charts. And let me just make sure that's recording fine. There we go. Now, we're looking at a weekly chart of the US dollar price of gold here, and as you can see from the low in October 2023, it's pretty much gone up in a straight line. We're up 72% and right near the highs. Now, it's hard to say where it's going from here. I mean, if we look at the divergence signals on the MACD, we can see that the MACD has actually made a new high, while the RSI has not. So it's possible we're seeing some negative divergence there. And I mean, it is just going up in a straight line, but there's no resistance up here because this is a all-time record high price. So there's no previous key price level we can look at. I would have thought the $3,000 level would provide more resistance, and it very briefly did for a week or two, just trading below that sort of 2,960-ish level, close to 3,000. But aside from the fact that it's had such a great run and it's probably got a bit ahead of itself, it's hard to say if there's a sell signal here on the chart, especially on the weekly. But if we come to the daily chart on gold, and let's just delete that line we put in there, we can see price at an all-time record high. We are seeing at this current price level some negative divergence on both the MACD and the RSI, which is generally a sell signal. Kind of hard to draw a trend there, although you could say it's getting a little bit ahead of itself, but I'm not a huge fan of these angled trend lines. Not a whole lot to go off on the chart there, other than to say it's had a great run. The last time we saw some negative divergence was back in sort of September, October last year. We could see the price making a higher high and the MACD making a lower high, RSI topping out there as well. So that's what you call a negative divergence signal. This is one of my preferred signals to look for. And we can see that from high to low, there was a sell-off of about 8%, 8.5% in gold from there. And that occurred on the 30th of October. And you can see it did take until late January to make a new high. So there was roughly 3 months or so of the price going sideways or not making a new high. So maybe we're in for a little period like that where we're just going to sort of grind sideways. But for my clients and I, historically I've recommended a 20% allocation to precious metals, or maximum of 20%. For the time being, my clients and I have reduced our positions to about 10 or 12%, not because we think gold is going to crash, just because it's had an excellent run here and does look a little bit overdone, at least in the short term. Silver, if we go to the weekly chart, we can see silver has hit, I believe that's a 12-year high. I'm going to have to go back on the chart a little bit. The last time it was at this level, you could say it briefly touched there in 2012, but I mean the major highs were in 2011, so maybe it's more like a 13-year high. That's a monthly chart. If we come back to the weekly chart, and look, I've covered the historical trading back through 2020 and all that in many previous videos. So let's just have a look at where it's at now. We can see it's been in a, let's just get rid of that. Start again. We can see it's been in a very strong uptrend. You could say from a year ago or so, the current trend is here, but this is what I don't like about the silver chart is it appears to be forming a rising wedge, and a rising wedge pattern is generally a bearish pattern or a sell signal. And you can see the price makes a high there in May of last year, a high in October last year, and it's now making a 12 or 13-year high last week. But you can see the negative divergence on the momentum indicators as the price is trending up and making higher highs, MACD and RSI making lower highs. If you put that together with the rising wedge pattern, which is generally bearish, and the fact that silver has gone up about 55, 56% in the last year, it has had a good run, slightly outperforming gold, I believe, in that time frame. Let's see if we can, we won't do that comparison just yet, but if I go back to the gold chart, we can see since February last year, gold is up, well, almost exactly the same, 56%. Probably not a coincidence that gold and silver have had pretty much exactly the same move over the same time frame. But for me, again, it's not that I'm bearish on silver long term. I do think silver is historically extremely underpriced, and please keep in mind this is just a charting video. It's not an investment recommendation. Please do your own research and see what's appropriate for you. But just in the short to medium term, it looks like silver's had a pretty good run. So for my clients and I, we've moved out of the mining stocks. the gold and silver mining stocks, and I mistakenly moved out of those too early. I didn't expect gold to run way up past 3,000, but I still think it was an appropriate risk management decision to go back into a fund that holds mostly physical gold, some physical silver, and of course a little bit of platinum and palladium, which we'll have a quick look at later on in this video before this video wraps up. Here we're looking at a weekly chart of the Australian dollar price of gold. I mean, talk about just going up in a straight line and accelerating as well, accelerating as the Aussie dollar continues to be very weak. We did briefly trade above $5,000, so a very key psychological price barrier. Again, something like $5,000 on gold in Australian dollar terms, you would expect some selling, some resistance at that price level, but nothing to show on the weekly here other than maybe the RSI you could say is negatively diverging, but the MACD is continuing to make highs. There's really no sell signal yet on that chart other than that the price is just in a raging uptrend. So who knows where it's going to top out. I would say we should not have our full allocation when we've seen such a big price move. And in Australian dollar terms, if we go back to the low of October 2023, we can see gold is up 76%. And if we go from the lows in February, like we were looking at with our last comparison, it's up 63%. That's just because the Aussie dollar has been a bit weaker than the US dollar, so we're seeing a slightly higher move in the Australian dollar price of gold. If we come to a daily chart, here we can see a little bit more of a sell indicator. If we're looking at, although the MACD is very close to making another high, I mean, I would say this is probably, we're seeing a bit of negative divergence there. Again, not a whole lot to look at on this chart other than, I mean, look at that trend. It has broken a little bit higher, but there's not a whole lot to go off there. So I'm just saying that my clients and I were exercising caution in precious metals. We don't quite have our full allocation. We've had this excellent run. Pick your poison as to why we've had such a big run. There's probably 17 reasons out there. I think one of the key reasons is that we're seeing evidence that inflation is starting to pick back up again. And if you've been following me for a couple of years, you'll know that I've expected another big wave of inflation to happen after the interest rate cuts have come too soon. Central banks did not raise interest rates high enough to suppress long-term inflation, in my opinion. And I think they've started cutting interest rates too soon, and I referred to it as the back padding phase. And I think that's the phase that the central bankers, the politicians are going through right now, is patting themselves on the back, telling us they've solved the inflation problem, probably right before the next big wave of inflation kicks off. Let's hope I'm wrong about that. But certainly if you look at the gold and silver prices, or if you look at the price of copper, they're telling you that maybe the inflation problem's not solved. Certainly gold, if you're of the view that gold is somewhat of a canary in the coal mine, which I think it is. And if we look at Australian dollar silver, we're seeing the same thing again, topping out of the momentum indicators, little negative divergence there on the RSI and the MACD. Silver in an uptrend, sort of this channel there. Again, it's actually a record high for Australian dollar silver, because the Australian dollar was very strong in 2011. So silver has made an all-time record high in Australian dollar terms. And, as with any investment, you probably shouldn't have your full allocation when something's at an all-time record high price. It makes sense to reduce allocation, take a bit of profit, move it into other areas that are underpriced. At least that's what we're doing. But again, I'm not calling for a crash in silver. I'm just merely suggesting that we've had a good run and it's probably due for a bit of a breather, a bit of consolidation. You can see again these key previous levels are respected. That was the previous all-time record high, and you can see that was in October last year. A touch there. Once it broke out, it came back to, quote, return to the scene of the crime to test the breakout. Bounce, went on to a new all-time high. But again, looking a little bit expensive in the short term. You're going to see the same thing. Gold priced in euros, going straight up 67% since the October low. Japanese yen, same thing. Gold is in a long-term bull market, a pretty consistent sort of uptrend. There will be times where it takes a breather, and I think we're probably due for one of those times around the $3,000 level. We'll have a quick look at platinum. Platinum, well, it peaked way before that. It peaked in 2008, and if you take the absolute peak, platinum is still down. Look at that, I'm running out of energy on my laptop, but that's all right. We get through this video. Platinum is still down 55% from the peak in 2008. And you can see it's been going through this long period, almost a 10-year period of consolidation around this sort of $800 to $900 level. And if we zoom into a weekly chart, I would say, you know, this is the trend, and I try and capture as many of the touches. I'd say, you know, that's the downtrend it's in. A little bit of a grinding uptrend forming there as well. I don't know which direction it's going to go, other than to say it's, you know, compared to gold and silver, platinum is very underpriced. In fact, if we go to a short-term chart, go to a daily chart on platinum, it's a little bit messy, the trading action here. You might argue that, you know, there's some support here around the $900 level. You can see it extends back to there. Support there at that level. It's struggling to get past this sort of 1,050 level. Lots of resistance there. Hard to say where this is going to go, other than, you know, like I personally think buying platinum and palladium directly is too risky. I don't think your portfolio, I don't think our portfolios need to be that specific where we outright own platinum or palladium, which is why I prefer a precious metals basket fund that does have a small allocation to platinum and palladium. Again, not a whole lot to go off on this chart other than to say that it's historically very underpriced. And if we look at palladium, if you go to a weekly chart on palladium, it's just been, you know, since the spike high in, what's that, 3 years ago. I mean, if you want to take that spike high, that might be a bit difficult to see on this video, but it was around the $3,400 level. You can see palladium is down 70% in price. There was clearly a double top here around the $3,000 level. Again, a key psychological price barrier. You can see the double top with some negative divergence, so that was clearly a sell signal. At that level, and then since then a downtrend has come in. Now I would exclude those two spike highs and say that was a downtrend starting to break. It's going sideways. You can see the whole way down as the price was making lower lows and flattening out. You can see positive divergence on the momentum indicators, so it's a sign that the downtrend is ending. If we zoom in a bit on the chart, on the daily chart, again, not a whole lot to go on here. I would not necessarily draw that as a trend because you've only got the high there and the one touch there, and then the third touch failed. So I wouldn't necessarily draw a line there. Again, now that I'm looking at these charts live, there's not a whole lot to go off on this. So again, I would say, you know, for me and my clients, no need for us to have direct investment allocation to palladium, but certainly long term, when you go back and have a look at where it peaked, you know, in 2021 and in 2022, you can see historically it seems to be very underpriced. And of course, copper, we'll just have a final look at copper. This is a monthly chart of copper. You can see that that sort of $4.70 level was pretty key for copper. Lots of touches there in 2021, 2022, again in 2024, 2 touches, and then a break with a big green candle. You can see as the price was double topping there was negative divergence back in 2021, 2022. So even on the monthly chart, we can see that there was a sell signal there. And then of course, the price returned to the previous key high from 2018. So you can see how these previous key price levels are very important. They're quite often respected by the market. So that was a nice little buy-in level there. And of course, copper has now, it's a breakout. But generally, when you see a breakout like that, what are we going to see? We're probably going to see a return to the scene of the crime, a test before it goes onward and upwards. So there is an uptrend there, you could say. In fact, we might zoom in onto a weekly chart and see if we can identify that uptrend a little better. I would say, you know, that was a pretty key low there. A little bit of an uptrend forming. It's obviously gotten a bit ahead of itself, so there's no reason why it can't come back to, say, you know, $4.30, test the uptrend. You can see there is a little bit at this all-time high. You got the double top, or potential double top there. It's not a double top yet, but you can see some negative divergence. Price making a higher high slightly, or touching the same high. Negative divergence again, same on the RSI. So probably in the short term, copper, gold, silver, probably a little bit overdone in the short term. Some downside risk, but longer term, showing some key breakout signs. And if we go to a daily chart on copper, let's just clear those lines there. You can see the new high breaks above the new high, and then just a little sell-off return to test the breakout. But again, a little bit of an uptrend there, so maybe in the short term it's only going to come back to $4.90 and try and rally ahead. Not a good sign that, we're entering a somewhat of a global recession, and copper price, a very key industrial metal, hitting an all-time record high. That's a sign that the inflation problem is not solved. Um, but yeah, some interesting moves in the precious metals. Probably not so much that the charts are interesting. It's just interesting that they're breaking out, and I thought appropriate time to do a little bit of an update on the precious metals and some of the related metals like copper. And thank you for taking the time to listen. Please reach out if you have any questions about investing, charting techniques, what's going on with the price of gold. This is more of a charting based video, so we're not necessarily talking about the fundamental reasons why gold's rising, but there's a whole bunch of theories out there on that, and they're probably all somewhat accurate. To pick your reason. Thanks for listening.